What is the stock market? What makes the stock prices move? What moves the stock market in general? And what even is a stock? Well, if you've never invested before, or if you're just getting started and you are unsure of what these things are, stick around because this video is for you. I bought my very first stock when I was 18 years old. And I'm gonna be honest, I did not know what I was doing. All I knew is that I've watched movies before where people invest money. They somehow put their money in the stock market, and that's supposed to set you up for the future. I've heard it from people and they've all said the same thing. Yeah, invest early, invest young, make sure you get into the markets as soon as possible. But what does that even mean? I don't even know what the markets are. I didn't even know what a stock was. I honestly had very limited knowledge, but I wanted to get into stocks because I wanted to set myself up for financial success in the future. And that's what I've always been told. That's what I've read. That's what I've seen. I was not always in the stock market until I was 18 years old. And that is really when I took a deep dive into actually trying to learn and become financially free through the markets. I didn't have a lot of people in my life that actually knew anything about the market. Of course, I've heard the term 401k, but I didn't know exactly what it was. I knew that my dad had a 401k through his job and that he was building it because I've heard conversations from him and my mom. But I really didn't learn about the stock market until I went to college. I actually got an undergrad and my master's with an emphasis in finance. And so I actually had to take classes about the financial markets, about investing. Those professors are the ones that really were eye-opening to me about how to actually invest, why to invest, and what are the different aspects of investing, different asset classes, the different types of investments that you can actually take, and the different paths that you can take to have all under your portfolio. But unless it was for those classes, I wouldn't have been exposed to a bunch of knowledge that people were actually giving me, my classmates, my mentors, my professors. And if you don't have that knowledge, that's okay because we are not taught that in general high school. And not having classes to gain that knowledge when we're in high school is a huge failed part on the educational system. Because I 100% think that that should be one of the biggest topics that we actually learn when we are in high school. Because starting as young as possible sets yourself up for the long-term financial success. That's why in this video, I'm gonna go over the most basic stock market knowledge so that you guys can finally get a foundation on what a stock is, what the stock market is, and then you can take that knowledge and start growing and compounding that knowledge for more knowledge in the future, and you'll become an investor and become financially free in the future. So what is a stock? Do you know what that is? I'm gonna break it down in a super simple example. It's not a realistic example, but it's a super simple example where you're actually going to understand why they have stock and what a stock is. So let's say you want to start a business, and this business is a bread baking company. You're going to bake bread and you're going to sell it to hundreds of people all in your area, all throughout your town or city. The only thing is you need equipment to actually be able to bake the bread and sell it. You need an oven, you need flour, you need yeast, you need everything that it takes to actually make bread. And then you're going to sell it. So you need packaging and you need a label on it and you need all these different things. So you are wanting to make bread, but you don't have the money for it. What do? You go to all your friends and family and you ask them for money for a portion or a percentage of the company, meaning that if they give you money, you will give them an X amount or an X proportion of this company. So say you go to your dad and you say, "Dad, I want to bake bread and I need $1,000. And your dad says, "Okay, it's a risk for me, but I'll give you $100 and that'll put you on your way to getting your $1,000 that you need to actually make your bread and actually have the equipment for your bread so that you can make bread." You say thank you, and in exchange for that $100, you now give them 10% ownership of your bread baking company. And the reason it's 10% is because he gave you 100 out of the $1,000 that you needed, meaning that they now have 10% equity in your company. And that's basically what a stock is. It's just at a much smaller level because these market caps for these companies is massive. And so when you buy a single share of a stock, you're actually getting a super small percentage of the company. And now that your dad is a 10% equity owner, meaning that he literally owns 10% of the company, he can now take his equity, his shares, his stock, and go and sell that to other people. So say he wants to go sell 5% of his equity. Well, he can go to his coworker, Bob, and say, hey, Bob, I got 5% equity in this bread baking company and I want to sell it for $100. Do you want to take the risk? And Bob might say yes, and if he does, that means your dad just basically broke even, and he actually still owns 5% without actually having to pay any money because he already recouped his money back. Now, that's a super simple example, and it's really not realistic because there's a lot of different things and criteria that your company or business has to meet in order to actually go public and be on an exchange like the stock markets. But in short, basically what I'm trying to get you to understand is that anyone that buys stock or shares in a company is actually an owner. Now, it might not seem like you are because you have such a tiny amount, but you actually are an owner of the company. You actually own a portion or a percentage of that company. I think Apple right now is at $230 per share, and the market cap is like $3.5 trillion. So everyone that actually buys stock is now an owner in the company, which, like I said, is awesome. But that also means that you take on the risk of the company going bankrupt or failing. If the company goes bankrupt or failing, you can lose all your money. But also, on the opposite side of that, if the company does really good and they grow and they grow and they get all this profits and huge potential and they just keep growing and growing, you actually get the benefits of that because as a owner, as a shareholder, as a stock owner, you actually are entitled to a portion of the profits. The percentage that you own of the company, you actually get that money. And the stock price will grow. And as the stock price grows, your investment portfolio grows with it. And so there's all these different pieces in the stock market, but basically, if you are a stock owner, if you buy a stock, you are actually a owner of that company that you bought in. And stocks are bought and sold on exchanges, and the price is all dependent on what the market is doing. Supply and demand basically runs the market. If there's more shares that are for sale on the market, then the price will be lower. If there's less shares and a high demand, then the price goes up. And we see that all the time with these companies that have breaking news that comes out, or they are expanding or acquiring. All of a sudden, this good news, people want to buy. And as people are buying really fast, the demand gets really big, and that pushes the price higher. It could also be the opposite effect where there's bad news that comes out and people are like, I'm getting out of this company. I don't think that's good. And they start selling. They sell, and the demand gets weak. And as the demand gets weak to that same supply that's on the market, the price falls. And all these different stocks are listed on market exchanges. And these stock exchanges are basically just centralized locations where all these stocks are. And that's really convenient for us because you don't have to go to each individual company and say, I want to buy stock in your company. Can I buy stock in your company? Instead, they're all listed on an exchange. And on this exchange, it's just a centralized location that has thousands of stocks on them. And there's different exchanges throughout the world. There's the NASDAQ, there's the New York Stock Exchange, there's the London Stock Exchange. Every part of the world has their own exchanges that has their own companies in those countries. So now you know that a stock is just a piece of ownership in the company. And the reason that these companies do this, they pool money together, is so that they can grow and continue to expand. because it takes a lot of money. It takes billions and billions of dollars to create companies like Apple, Google, Walmart. So they go out and they get all this money that's pulled together so that they can continue to venture out and grow as a company. And then these stocks are listed on stock exchanges where you can actually buy and sell the stock, and the price on the stock exchange is all relevant to how many shares or how much supply is on the markets compared to how much demand there is, based on knowledge that the public is receiving from the company to either buy or sell. How do stocks actually get onto the market? That's a good question because people don't understand that you can have a private company and a public company. So like I said, there's requirements that companies have to meet in order to be listed on the markets so that they can start making money, building this money up through the markets to actually expand their business. And what this is called is an IPO. Companies go through an IPO in order to list their stock on the market exchanges. Basically what an IPO is, it stands for an initial public offering, meaning that it is the first time they are offering stock to investors, offering the equity, offering that investment to investors on the stock exchanges. That's an IPO. So if you're ever interested in actually buying a stock from a company, you have to make sure that they are a public company. You can do this by a quick Google search, just a quick, is Apple a public company? And it'll pop up. Is Google a public company? Yes, they are. It has to be public in order to actually be able to invest in it. Now, there's private investing. Yes, that's a whole different thing, whole different scenario. But I'm talking about the stock markets and what a stock actually is. So with a company being public, you can actually go and buy that stock, making you a part owner, which I think is super cool to think about. If I buy a Nike stock, I am an owner of Nike. Or if I buy Walmart stock, I'm an owner of Walmart. Same as Apple, Google, every single public company. When you buy their stock, you are a part owner of that company. Now, you've probably heard me say shares and stock, and you might not know what that means. Stock is basically the offering of the company. When you buy stock in a company, you are buying it for a unit measurement of shares. And every share has a share price, meaning that in order to buy one share, you have to pay the price that it is listed on. You also have a market cap. So every stock has a market cap. For example, Apple's market cap is $3.5 trillion, and a share is about $230. So in order to find your ownership, you basically take the amount that you actually own. So I own $230 if you own one share of Apple, and you divide that by the market cap, giving you your actual decimal. Now, if you actually do the math, owning one share of Apple, you might own 0.0000, like probably 10 zeros, and then like a 2 or a 1 or something like that. But you can actually do the math, which I think is cool because now you're actually an owner and you can actually do the decimal to see how much you own of the entire company. And by being an owner, you actually own everything that the company owns, just at a super small fraction. Unless you have some serious money where you're buying $1 million, $10 million, $100 million, all this big money, this corporate money, then you're probably at a super small fraction. But it's still really cool because you are an actual owner. And like I said earlier, stock price is all depending on supply and demand. And the supply and demand moves a ton because we are always getting more knowledge about these companies, different reports, financial charts, financial reporting, graphics, news, all these different things can make the stocks move, which is why the stock market is volatile. It moves up and down, and there's waves, and there's flows, and there's highs, and there's lows. There's all these different ways that the stock can actually move, but it's all based on supply and demand. So you're going to want to do your own research before you actually decide to buy and sell a stock. And that's a brief overview of the stocks in the stock market. You have stocks that are actually part ownership of the company. You have stock markets or stock exchanges where all these stocks that are public are traded in one centralized location, and the price is all determined on supply and demand with the knowledge that the public and investors are actually receiving every single day, especially when the markets are open. Now, I have a question for you. Do you invest? If you don't, that's okay. Just tell me why down in the comment section. And if you do, tell me what you're actually investing in. I want to know these things so that I can make more videos in the future on questions that you have, concerns that you have, or maybe it's just about different stocks and why I think they are good buys or not. Whatever it is, comment down below. And if you like this video, if you want more videos like this to set yourself up for financial future and to gain financial knowledge, hit that like, subscribe, and hit that little bell icon, because there's definitely going to be more videos just like this. But until then, remember, you can do all things through him that give you strength. Peace.